Welcome to ShortView Trading. This is your morning market hit for Monday, the 20th of April. What matters today and this week for traders? And indeed, this is an enduring relief rally. It's now 19 trading sessions old. We're entering day 20 today, and that puts it in the typical range of normal wave 2 relief rallies that we've seen over the last 10 years. That is normal in the sense of the number of trading days that it's been ongoing. The typical range for a wave 2 relief rally is 17 to 26 trading days, after which the wave 3 then begins. So we're clearly in that range today. And with that, the market's bullying the shorts and squeezing the bears. But if we look at a lot of our medium-term models, these are 1 to 4 month models, good on a 1, 2, 3, 4 month basis. Many of them, having given very strong buy signals in late March, are now back starting to signal sell. In other words, complacencies creep back into prices. And you can feel that in the narrative in the market, much more optimism around now. We saw changing views from some of the major investment banks, and indeed in the media as well. There's been a change anecdotally in the media's tone, but you can also see that in these models that measure appetite for risk and measure the degree of fear in prices. Markets are now complacent, fear has ebbed, but our models are back on sell in a medium term, and they're also on sell in the short term. If you look at a short term put to call ratio, it shows you, as you can see now, there is very limited downside put protection now in portfolios. In other words, traders and investors are now vulnerable to the downside and vulnerable to any poor news flow. Added to that, technically the market's overbought, as you can see in the technical scoring system. The model showing stocks above their 10-day moving average is also back on sell again. So this relief rally's been hard and fast. The S&P's up around 30% and change from its lows, and it's also in the typical number of days that it takes for a wave 2 relief rally to occur. So we continue to favor the short side of this market, and we look for some weakness in the near term over coming days and weeks. Over and above all that, risks remain, not least the fact that financial stress is clearly still in the system, albeit there was a tiny bit of easing of that on Friday in many of the indicators, although not quite all of them. In fact, if you look at some of the Eurozone bond spreads, they widened further on Friday. For full detail on how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today and this week? Well, much the same as last week. Anything further from policymakers, and we had a Chinese rate cut over the weekend, albeit fairly limited. We've had some other bits and pieces out in terms of policy over the weekend from the US and the UK. We continue to watch any further news flow on that this week. We're also interested, of course, in price action, evidence of stress in the financial system growing or easing, and of course key macro over the course of this week. And in particular, we'll be looking at the flash PMIs coming out mostly on Thursday across much of the major economies of the world, and other bits and pieces of macro data over the course of the week. Added to which, US Q2 earnings continue in earnest. They'll be watched closely this week. We have Amazon and Intel amongst others. So that's it from us. That's your morning market hit for Monday, April the 20th. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Just search under ShortView Trading. Thank you for listening. Stay safe. Trade well.